A normal day at the office. It's Tuesday, just finished tax season, about to wrap up. Mailman comes. Plain envelope, black ink, probably some spam, but you open it up, you have 30 days to respond. It's the IRS, they want answers. Maybe it's a $500 charitable contribution, or maybe you just got caught up in the taxpayer compliance measurement program. Either way, the pressure's on. It's not about what you think is fair or what your client thinks is fair. It's about what's documented, what's legal, and what the IRS has records of. Because once that notice hits, you have to be very strategic and organized in your response. Whether this is your first time catching a CP 501 notice or you've worked in resolution your entire career, here's a step-by-step guide on what to know when that audit notice hits. All right, so you or your client received an audit notice in the mail. Here are some things you need to know about defending an audit. First, you need to determine the scope and type of the audit. The scope will generally say what they're auditing. This can either be a line-by-line audit of an entire return or a specific component of the return, such as charitable contributions or a Schedule C. Be sure to read the audit notice thoroughly to determine what they're actually looking for. The next thing to determine is if this is a random audit or if this is a specific issue that they're targeting through a campaign. They may be targeting specific items for that year, such as the employee retention credit or abusive tax shelters, Section 199A deductions. Knowing what they're targeting will help you anticipate the questions they might ask during the audit to help you be better prepared to defend that. The next thing to know is what type of audit this is. Most commonly are correspondence audits. That's basically you receive a letter saying maybe we've adjusted your return or we're simply requesting substantiation for a single item on the return. This would be common for items such as CP 2000 notices. The next type of audit is the office audit. This is the fun one where you're cordially invited to join an IRS agent at an IRS office. They will request you to bring specific documents and you will be interviewed in person by the IRS agent. The next highest level of audit is a field audit. This is the most fun, where they show up to your place of business or to your home and interview you in person. And for the field audit, it is recommended that you bring a legal counsel along with you. The next item to determine are the years under investigation. Sometimes they're requesting multiple years, other times it's just for 1 year. Be sure to determine which year or years they're looking at and never give them more information than they're asking for. Also be aware of the statute of limitations for audits. Generally speaking, 3 years is the statute of limitations from the filing date or the due date of the return. However, that date can be extended from finding fraud. There is no statute of limitation for fraud. Also, if you have not filed a return, the statute of limitations never starts, so there's technically an unlimited statute of limitations for unfiled returns. You can also find in the Taxpayer Bill of Rights that there are appeal rights, which will also be noted on any notices you receive. Generally speaking, you have 30 days to respond to notices, and the 90-day rule from a collections notice gives you 3 months to appeal those notices. There are a few types of appeals. We have regular appeals, like I've stated, with the 30 and 90-day responses. There are also fast-track appeals, which is most commonly utilized by business cases, and this allows you to mediate with an IRS representative. And finally, there are ADR, which is Alternative Dispute Resolution. This generally requires mediation and or arbitration and is involved with cases with stubborn agents or clients where they have a hard time determining a final action. Finally, there is tax court. If you've exhausted your appeal rights, you can then move to tax court. You can also skip the appeals process altogether and go directly to tax court. The 90-day letter that I mentioned earlier is generally involved with the tax court. This is your final chance to get in front of a judge to dispute your case in the U.S. tax court. The good thing to know is that over 90% of cases that go to tax court settle outside of court. While receiving audit notices is stressful, they are navigable. Be sure to be organized, prepared, and seek legal counsel when necessary.